Live from Bloomberg's world headquarters in New York, I'm Sonali Basak.
And I'm Tim Stenovac. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Solana is the next target for a possible crypto ETF. We're going to discuss it with Matthew Sigel, whose firm just applied for approval.
Plus, we're seeing a slowdown in trading volume for Bitcoin as the ETF boom appears to subside. We discuss with Galaxy's Steve Kurz.
And the SEC is suing Consensys, the company behind MetaMask. We're going to explain how the Supreme Court decision on SEC judges affects the case.
That's all ahead on Bloomberg Crypto. First, though, here's a snapshot of the market. Bitcoin over the last 7 days, well, kind of doing a whole lot of nothing. It's pretty much flat over the last week. It did rebound about 4% from those June lows, still down about 15% from those all-time highs back in March after the launch of those spot Bitcoin ETFs. Look, we're going to talk a lot more about this a little bit later, but something interesting is starting to happen when it comes to Bitcoin trading volumes, at least on weekends. Unlike stocks, Bitcoin trades 24/7, so it can be traded on the weekends. But now the proportion of Bitcoin traded over that time period has declined to an all-time low of 16% this year. That's according to the cryptocurrency research firm Keiko. So maybe those wild weekends that Bitcoin was previously known for are now a thing of the past, Sonali.
We're going to talk more about this in the context of ETF flows in particular. Let's talk about those flows because investors in the second quarter poured far less money into digital asset products tied to the token. When the price of Bitcoin dropped roughly 13% through that period, the previous 2 quarters saw surges of Bitcoin of at least 50%. Remember, you're talking about the difference in the first quarter of about $12.8 billion versus $2.6 billion into those ETF products, Tim. And remember, into that first quarter approval, you saw just a ton of excitement around Bitcoin, and some of that obviously is moderated.
You're talking Bitcoin, I'm talking Solana, because Vaneck and 21 Shares have sent separate applications for the approval of a Solana crypto ETF, the likelihood of which could hinge on the outcome of the presidential election. Solana and the SOL token was championed by SBF, but after FTX and Alameda Research exploded back in 2022, Solana's very survival was in question. That's when the crypto fell to around $8. Now, Sonali, it's at around $150.
Now, we're going to discuss this more with Bloomberg intelligence analyst James Seyfarth, who, of course, watches this market very closely. And from Solana to Ethereum, with Ethereum potentially right around the corner, what do you expect for a spot Ethereum ETF approval, and how will it compare to what you saw out of Bitcoin?
Yeah, so when do we think it's going to happen is a good question. Honestly, if you asked me 2 weeks ago, I would have said, I think the SEC is going to push it off their plate before the July 4th holiday. They obviously haven't done that. So it's not happening this week. I seriously doubt it. It might happen the following week, so July 8th, the week of July 8th. But it remains to be seen how many comments the SEC needs to give back to these issuers, how much conversation needs to happen between the SEC and these issuers. So it's possible that it might take into the week of July 15th. That said, I'm pretty confident these things should launch in July. I don't know why they wouldn't. That said, the SEC is obviously in no rush. How is demand looking? It's hard to tell, right? There's no way to know. There was virtually no demand for the Ethereum futures ETFs, but there's good reason for that. There's an inefficient product. Our view overall is roughly that my base case is I think they could see 20% of the flows that the Bitcoin ETFs saw on a net basis over like a similar time frame. So if you look at the first 6 months, as you talked about at the top, Bitcoin ETFs have taken almost 15 billion since they launched, or just about 6 months. I think if you see 20% of those flows, that'd be a pretty good success. That's my base case for these Ethereum ETFs once they do launch. But that'll depend what's going on with the actual underlying market of crypto and Ethereum itself.
So, James, it raises the question of who these products are for. In your view, who are they supposed to appeal to?
Yeah, I mean, they appeal to one. It's hard to write. So like Bitcoin is very easy to like pitch. It's the digital gold, digital store of value. It's very simple. That's easy for investors and advisors to understand. They're going to add it as a diversifier to their portfolio. It's an alternative asset. What is Ethereum? A lot of them just think of crypto and they think Bitcoin first. But there's a lot more education that needs to happen around exactly what Ethereum is. Is it a decentralized web application for Web3? Who knows, right? Who knows exactly what it's going to look like? But they need to narrow down on that pitch. That said, if you just just talk to most advisors, they like to diversify their exposures. They like index funds. They like diversified funds. So if you already have 2% of your client's portfolio in Bitcoin, why not add another percent or put a little bit on to get diversified crypto exposure? Will people sell some of the Bitcoin ETFs and use some of those proceeds to buy Ethereum to get some of that diversified exposure? Who knows? That will remain to be seen. But I think there's going to be a lot of people out there that are interested, because if you look at Ethereum, there's revenue tied to the way that protocol works and the way that it operates.
All great points. James Safer over at Bloomberg Intelligence. This is why we love checking in with you. Thanks so much. Do appreciate it.
And when it comes to an Ether ETF in particular, we asked SEC Chair Gary Gensler about the chances of an approval last week at Bloomberg Invest. Take a listen.
It's really about the asset managers making the full disclosure so that those registration statements can go effective, and those lawyers know what that is. It's something our Division of Corporation Finance handles hundreds or if not thousands of times over anybody's career. It's smoothly functioning. It's really up to the asset managers to make the proper disclosures.
For more, let's bring in Vaneck, head of digital assets research, Matthew Sigel, who joins us now to discuss his filing of the Solana ETF. Matthew, good to have you with us. It's not even the top 5 biggest cryptocurrencies that are out there right now. Bitcoin has more than 50% of the market. Why is Solana and Sol so exciting to you? Why is the opportunity there?
So I think there's just a very small handful of crypto assets that have the potential to be an open source app store, a real competitor to Google and Apple that allows entrepreneurs and developers to build open source applications that operate globally, 365, 24/7, with no intermediary that can censor transactions. And ETH is the gasoline that powers that open source app store, and it's the largest one. But when you look at the characteristics of the Solana blockchain, it shares a lot in common with Ethereum in terms of the decentralization, but it offers much faster transaction speeds and much lower fees. So over time, we look at this market as a winner-take-all or a winner-take-most environment. You may recall that Apple had 100% of smartphone profits even when they only had 40% of market share. It's possible that the crypto market develops like that, and with Solana about 20% of the size of ETH, the upside, if they can become that dominant open source app store, is much higher.
Big elephant in the room here is how regulators would treat Ethereum versus Solana versus Bitcoin. How much concern do you have about the regulatory disapproval of Solana versus how they treat Ethereum?
Well, one thing that Gary Gensler said at your conference last week, which was not in that soundbite, it was that the Ethereum applications are going smoothly. And this might be the only time in 3 years that I've agreed with Gary Gensler about something. But if these products are allowed to trade, then that confirms that Ethereum is a commodity, and the same thing will be true of Solana as well. So, there's some focus that there's no regulated futures market for Solana, and that might be holding back the ETF. We think that is a Gensler psyop. He has created that condition since taking power. There are a number of ETFs that trade where the futures market is irrelevant to the price formation. I'm talking about shipping ETFs, uranium ETFs, power ETFs. So with the slight change in the regulatory environment in Washington, we think these will get approved.
But do you think if Biden wins in November, there's no way they get approved?
I wouldn't say no way. We could still have a new SEC chair even if Biden wins.
So it all depends on the SEC chair?
Yes.
And if Gensler is still the SEC chair, it's not going to happen?
Unless he's been given instructions to treat this asset class differently, there's a good chance that crypto voters are going to make the difference in this election. And we're already seeing a change in the regulatory environment at the elected official level, right? Multiple Democrats voting for pro-crypto legislation.
Also want to kind of double down here on the question between Ethereum and Solana, because if you were one of the few issuers that may be offering both ETFs, how do you talk to clients about it? They are direct competitors.
Well, I mean, fiduciaries want to pick the asset that they think is going to go up the most and then take a bet. So this is the largest capital markets in the world. We're in the business of designing intelligent investment products and letting our clients choose. We've put out a lot of research on why we think that Solana may end up as the blockchain with the largest market share, but let's let the clients decide. And I would note that the SEC, all of these Ethereum ETF applicants are have filed now. They have live filings, but it is not too late for the SEC to do the right thing and revert to its traditional first come, first serve process towards approving these ETFs. And under that framework, Vaneck would go first.
Hey, Matthew, I just want to go back to something that you said earlier about this being a competitor to Google and Apple. What's that vision? Lay that out for us.
Google and Apple take up to 30% of the top line of any app that is listed on their marketplace. And it is a huge hurdle if you're operating with low profit margins to give 30% off the top to Google and Apple. It's like Mr. Wonderful and Shark Tank, right? No one wants the royalty deals because they're very dilutive for the entrepreneur. So in the case of Ethereum, if you code an app store on the decentralized Ethereum app store, you are generally paying between 10 and 15% take rate, well lower than the Google Play and Apple model. And for simple payments transfers, that take rate is less than a fraction of 1%.
I think this is really important as well because you have been progressive enough to look at Solana in the form of an ETF already. What else are you considering to package into ETF form? What's on the lineup that could be right?
Well, without giving specific plans, you could look at our ETF lineup in Europe, where we have multiple spot products, more than 10, including baskets. So I think as the regulatory environment changes, that will also, those products may also come to market.
Vaneck, head of digital assets research, Matthew Sigel here on Bloomberg Crypto. And coming up, Galaxy's head of asset management discusses the slowdown in momentum for Bitcoin and what he thinks is the next catalyst.
And Consensys is the latest target for the SEC. We're going to discuss why the regulator is suing the company behind MetaMask.
And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
The proportion of Bitcoin traded over weekends has declined to an all-time low of 16% this year, according to cryptocurrency research firm Kaiko. We're going to discuss this with Galaxy's global head of asset management, Steve Kurz, because you've been in the market, from what I understand, since almost the beginning, Steve. And if you look at the way the trading of Bitcoin has changed before and after the ETF launch, the spot ETF in the United States, what has surprised you most recently about how people have engaged, especially as that initial ETF wave has calmed down?
Yeah, look, I'm not worried about Bitcoin. Obviously, there's been selling pressure. We have governments that are selling. We've got the Mt. Gox technical. It's the summer. We've had a very, very impactful 6 months for Bitcoin, so I think this range-bound trading is natural. What we're most focused on is really the institutional wealth market kicking in, and that's starting to happen. That's going to be slowly and then all at once. And so in the next 2 months, you'll see some of the platforms switch into proactive selling versus reactive, taking orders from clients. Obviously, when you look at the presidential debate, there's a reason for Bitcoin to exist. So I'm not worried about Bitcoin, but I think it's just a bit of a lull right now.
But you look at the lull, and even you look at Ethereum prices, the initial excitement around the idea of an ETF has kind of tapered off. And Ethereum prices have wavered, and they're lower than their highs. So how do you expect the excitement into the Ethereum ETF to play out? Will it be meaningfully less than what you saw for Bitcoin?
Yeah, I think you have to zoom out. I mean, prices move at the margin, and the fact that a structure like an ETF is existing for Ethereum is massively positive in the big picture in the long run. I think for the next couple of months, you'll have a different situation than Bitcoin. You'll have an overhang from products like ETH from Grayscale. You'll have that summer dynamic continuing to happen. But importantly, you do have 10 issuers or 9 issuers that are going to be telling that Ethereum story. That's the first time that's ever happening. And the story for Ethereum is really the story for crypto. crypto. So all of this noise about crypto is going to come into this Ethereum story, and maybe not out of the gates, but in 2, 3, 4 months, I think you're going to be surprised.
You said that watching the presidential debate, you saw a need for Bitcoin. It was sort of proof that Bitcoin needs to be there. Explain that. What do you mean by that? What did you see?
Well, I saw chaos for the country in a way, right? You'd like to have candidates that can speak to AI. You'd like to have them speak to crypto. And ironically, when you don't see that happening, the use case of Bitcoin as a report card on the system becomes a more natural thesis for investors. Maybe you need to hedge a little more than you did before.
Does the use case for Bitcoin as actually a tool for spending? Is that case made at all?
I think the younger generation feels that way. That's TBD. It's possible. We haven't seen evidence of that in the U.S., but globally, for sure, we've seen that. And it's both of those things. So yes is the answer, but not yet.
Steve, how do you see this all playing out? We heard from Vaneck a little earlier, this idea that if there wasn't a change in administration, that many of these future ETFs might not make it through the pipe. Do you agree with that?
Well, I do and I don't. I think the future ETFs beyond Ethereum really have to do with legislation being passed in the U.S. We've talked about this ad nauseum. I personally think whether it's the Dems or the Republicans, we're on the right track. Whether we get market structure legislation before the end of the year or whether we get it in a year, it's happening. The DC shift has happened. You can't unsee, tens of millions of voters, many of whom are single issue voters. And we're far enough from FTX, but close enough to an election for that shift to actually take hold. That will drive legislation, which will drive other ETFs beyond Bitcoin and Ethereum.
But does the DC shift still happen if President Biden is reelected?
I think so. Yeah, I think so. I don't think you can unsee. I mean, really, investors have spoken. The Bitcoin ETF moment, the 15 billion of net flows, the 60 billion of AUM. There's no putting the genie back in the bottle. People want this. Retail wants this. Investors want this.
So let's talk about the future. We're looking to see if an Ethereum ETF finally gets approved. And we were asking about Solana as well. That seems to be the next big play. Do you agree that you'll see a Solana ETF from Galaxy or many others soon?
Look, we'll meet the market where it is. We'll be there if there's a Solana ETF. We have obviously a lot of exposure at Galaxy to Solana. We're the largest node validator in the entire Solana ecosystem. We know Solana well. I think less important than any single coin is the legislation, which really sets up rules that allow more than just Solana to become an ETF. Obviously, you need futures markets for Solana to be able to become an ETF. You have those for ETH. You don't yet have those for Solana.
If you could write that legislation, what would it say?
Well, there's different pieces of legislation. The first thing we need is just real clarity on what is a security and what is not a security. And we still don't have that. We're 7 years into Galaxy. We've wanted it for many of those years. The rest of it is nice to have, but that's the most important piece.
Explain why you think a futures market is so important for the success of a Solana ETF, because others don't agree.
Well, I think, look, if you go to the courts have been really important in all of this absent legislation, and the courts have been very clear that that is the test. And that's why we were so confident that an Ethereum ETF would happen. And that's, I think, why you're seeing an Ethereum ETF happen, because you do have that reference point for the underlying spot market.
Okay, what's the date that it happens?
For which?
For Ethereum.
I think Ethereum is weeks, not days.
But within July?
Within July. Yeah, look, we've done this before. This is methodical. This is window dressing. The SEC is engaged. Obviously, Invesco Galaxy has a filing. I can't speak to the specifics of it, but we've been doing this for months now. We did it with the Bitcoin ETF. The products are substantially similar. We know the plumbing. We know the process.
You made this comment earlier about how you're seeing more interest from the individual investor, from their financial advisors. What proof do you have of that, given that we've seen a tapering of flows?
Well, I think, just to be clear, I don't think the flows that have driven the Bitcoin ETF have come as much from the intermediaries and the RIAs as we would have expected, or as many would have expected. I think the process takes 6, 9, 12 months. You need a track record. Who has the best total cost of ownership? These are the questions that the large gatekeepers need to see the answers to. So I'm not surprised that it hasn't happened. I just think that we're moving through those processes, and that will actually drive the next wave higher.
Steve, good to see you. Thanks for joining us.
Thanks so much for having me. Appreciate it.
That's Galaxy Global Head of Asset Management, Steve Kurz, here in New York. And coming up, why the SEC is suing Consensys and what the Supreme Court ruling means for the defendants' odds in court. This is Bloomberg. The company behind MetaMask recently reported that the SEC is winding down its investigation into Ethereum status. Now the SEC is suing Consensys, which owns MetaMask, alleging the crypto firm broke the rules by failing to register as a brokerage and improperly collecting millions of dollars in fees. Bloomberg's Ben Bain joins us now from Washington to discuss. Ben, what exactly is at issue here?
Alleging, like it has with many other firms in the crypto industry, that they should have been registered with the SEC as a brokerage or really a firm conducting transactions on behalf of clients in the digital asset space. This is pretty consistent with many of the other enforcement actions that the SEC has brought really over the past few years. It's interesting, your last guest was talking about the way there hasn't been clarity. I would just say kind of the SEC has been pretty clear. I don't think industry necessarily agrees with the SEC here, but this is just the latest example of the SEC doubling and tripling down on the idea that many crypto assets are unregistered securities. And if you're acting as a brokerage, you should be registered as a brokerage with the SEC, according to the agency.
Ben, how much is the SEC going after the infrastructure here? The exchanges, Coinbase, Kraken, Consensys, MetaMask. How much are they going after them versus the tokens themselves?
So the infrastructure, like most places in kind of the financial regulation in general, are where the intermediaries are. And that's where the SEC and other regulators really have their hooks. So from the very beginning, the SEC Chair Gensler has really focused on exchanges. He said that they're conflicted in many cases. They have conflicts of interest. Their business models are different than how other exchanges act in other asset classes. So he's really gone after them. And in terms of brokerages as well, as we're talking about, in this instance, when we're talking about a wallet, the SEC has really focused on the infrastructure here because that is where the SEC has its hooks. Brokerages, if they are trading securities, need to be registered. And exchanges, if they're providing a platform for the trading of securities, also need to be registered. And that's what the SEC has said pretty consistently here. So this is a pretty consistent case with what the SEC has been doing over the course of several years.
Okay, we know what the SEC has said. I want to read what Consensys has said. Quote, "We are confident in our position that the SEC has not been granted authority to regulate software interfaces like MetaMask. We will continue to vigorously pursue our case in Texas for ruling on these issues."
And Ben, when you think about the way that the industry has been fighting back, you even have Coinbase telling us on the record that they would see this all the way to the Supreme Court if they need to. How do you think that the recent Supreme Court decisions really impact the SEC's path forward here when it comes to crypto?
So I think on a very broad level, there's certainly an impact, as there is across the board for many of the things that the SEC does in terms of enforcement and regulation. Specific to crypto, I don't know that this is unique. I don't know that this asset class is particular in the sense of the impact it will feel, but there's certainly going to continue to be challenges, and I think that only gives more wind to the sails here.
Ben Bain from Bloomberg News, we thank you so very much for all of your coverage. And that does it for Bloomberg Crypto today. Join us again next week. Of course, it's a busy time in crypto. From New York, I'm Shonali Bassick with Tim Stinovic, and this is Bloomberg.